The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and you got markets. Quite an acceleration this morning to positive prices. S&Ps almost back to the highs we had on Friday after quite a sell-off. S&Ps right now up by almost 40 points. That's 0.75% in the green, trading at 52.21. We got Apple and Google potentially with the partnership deal. That's putting an acceleration in the NASDAQ 100, up 223 points this morning. Same deal, almost right back to where you were early Friday morning, which is remarkable. You're talking about almost a 300-point move lower on Friday, and we almost get it back. All of it by the open on Monday. We're up by 1.25% in the NASDAQ 100. We'll jump over to Google and Apple, both up a bunch this morning. Dow up about 60 points, up about almost 0.2% in the positive, 39,214. And you get the Russell up by about 6 points at 2,070. Bitcoin this morning down $500, 68,670 for Bitcoin. Crude above $81, up 48 pennies at 81.06 this morning. Gold contract up about $3. We were as low as $21.49 in the overnight session. You're back above $21.60, up $3 as I mentioned, $21.64 for the price of gold. And on Fed week, we get Chairman Powell on Wednesday at 2 p.m. Eastern time. All expectations are he'll leave rates where we are. We do get the dot plot in terms of where they're going with those rates forward. At least their expectations. We'll see what they have to say. But nonetheless, this morning we picked things up and we got a little bit of lower price, higher yield. You're talking about a 10-year 4.33. 4.33. We're on our way back to 4.5 almost. Pretty remarkable. You take a look at the 10-year on a daily, and you're approaching the lower price we had on February 23rd, which is quite a rebound. You make it to 112.04, and just like that was on March 8th, folks. 10 days ago, we were at 112.04. We got a 109 handle in the 10-year right now, as I mentioned. 10-year yield above 4.32, almost 4.33%. The 30-year, negative by about 11 ticks this morning at 118.12. We jump over to the dollar index, DXY. 103.43. You take a look at the dollar index, a little bit of a bounce, not quite back to where we were in terms of both of these. Pretty remarkable how those are going to play out. And you jump over to the VIX this morning on a positive market. The VIX still right where we were on Friday, right? Pretty interesting in terms of what we have going on right now in this VIX. You can't deny, folks, that the VIX has a series of higher highs and higher lows. When we have the market plowing higher, up by 40 points this morning, you actually have the VIX barely elevated, up by 11 pennies. Usually you'd see a lower VIX when you have the market plowing higher. Now the VIX is predicated off the S&P. S&P's up 39 points this morning. NASDAQ 100, the big leader, up 220. And let's jump over to the headline. And there it is. Apple is in talks to let Google Gemini power iPhone AI features. Now, they already have a big deal going on with search. They have for many years, if not decades. I'm not sure how long that deal's been going on. Nonetheless, they're considering an AI deal that would build on the search pack that they currently have. Apple has also had discussions with OpenAI about the deal. Yeah, but nonetheless, the two companies are in active negotiations to let Apple license Gemini, Google's set of generative AI models, to power some new features on that are coming to the iPhone software this year, on the upcoming iPhone they're talking about. Apple also was talking to OpenAI. If a deal came to fruition, it would build upon that search partnership that Alphabet's Google has paid Apple billions of dollars annually to make its search giant the default option, and they get to serve ads. Pretty interesting if it's maybe going to be the same thing, right? Is Google going to actually pay Apple? How is that going to work? The two parties have not decided the terms or branding of an AI agreement or finalized how it would be implemented. I mean, one of the things that's interesting here, just thinking about is that Google was taking a lot of heat early on, right? Now that's Google without the move. There's your move for Google shares. You're up by about $7.50. Google's got about 12.5 billion shares outstanding. So what are you going to add? $85, $90 billion to the market cap overnight on that deal. Google pushing 150. You back this up on a daily. You see the recent high of 155 before their prior earnings. So you're coming right up to the highs we had on February 9th for Google shares. You jump over to Apple shares this morning. Apple up about $2. There's your pre-market action on Apple. Above where we were last week. Apple's been underperforming dramatically versus this market, the run that it's had. So Apple going to pop to about 174. Google catching the real acceleration there. You jump to NVIDIA. They got their GTC conference going on right now. NVIDIA up by $24 in the pre-market, above where you were Friday. Still well off the highs of 936. I guess not well off. You're above $900, right? Pretty remarkable for NVIDIA shares this morning. But yeah, back to Alphabet and Apple. A deal would give Gemini a key edge with billions of potential users. I'd say so, right? But it may also be a sign that Apple isn't as far along with its AI efforts as some might have hoped and threatens to draw further antitrust scrutiny of both companies. And this has been one of the big things that people have argued, right? In terms of Google, with their monopolistic tendencies, that Google actually pays Apple to make sure that they maintain that monopoly. I mean, that's my version of it, but it pretty much is the deal. Apple's preparing new capabilities as part of its iOS 18, the next version of their operating system based on its own AI models. Now, Google's been plowing money into Gemini for some time, and yeah, it seems like it might be time to pay off. How are they going to serve those ads, though? That's one of the things that was discussed early on when this came to be, in terms of it's one thing when you're just searching for links, right? Google's got it made, man. In terms of you search Google, it gives you an output. Within that output, there are paid sponsor links that come up at the top of that output usually, right? We all know it. You search on Google, you got 3 or 4 links you got to go past. Those are the sponsored links, and then you get into the links that are queried from the search itself. AI is a little different. I don't know how that's going to play out. If you've ever used OpenAI or something like that, you ask it something, it'll answer you in paragraph form. I don't know how ads play into that. I'm sure they're going to figure it out. They're trying. Since early last year, Apple's been testing its own large language model, the technology behind generative AI, codenamed Ajax. Some employees have been trying out a basic chatbot dubbed Apple GPT, but Apple's technology remains inferior to tools from Google and other rivals. I mean, they missed the boat. I hope all those dividends were worth it, Apple. I kid to a certain degree, right? But Apple is the biggest company in the world, tech company to boot. AI is going to take over everything, and somehow they're not the leader. Think about that one on a longer-term perspective as they're pushing out dividends. Now, they probably had the money to do both, okay? I kid. But do you remember when Apple started pushing out dividends? And I'm not going against that because it makes sense they can do dividends. They have plenty of money for research and development beyond that. But it is interesting that somehow a company like Apple can allow a competitor to get a leg up in something as important as AI, and then they have to go to them as they have an inferior product. Nonetheless, now NVIDIA I mentioned, GTC conference, right? Check out this one. I was looking at this one earlier. There it is. You want to go to the GTC conference? How about $24.95 for the conference and training? You just want the conference? $2,095. You just want the exhibits and the keynote? $745. Not bad when this is basically a big PR event for them, right? You want to go online? You can do it free. We'll talk a little bit about that conference, see if we get any headlines. We got a lot to talk about. It's Fed Week, folks. Stay tuned. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Attention all opening call subscribers. Next Tuesday, March 19th, Basil Chapman will be hosting a live 90-minute webinar for all subscribers. From 4 to 5:30 p.m., Basil will take subscribers through an educative journey, giving insight into how he will approach this volatile market. Basil Chapman's opening call newsletter has a 30-day money-back guarantee for all first-time subscribers, and all subscribers get access to his trove of webinar archives, so you have nothing to lose. Go to the newsletters tab of TFNN.com and sign up today. We'll see you March 19th. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the morning market kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. Checking in on these markets as they continue to creep higher. We get the NASDAQ 100 up by 1.3% right now, 18,292. We check back in on Google shares, pushing 150 right now at 142.17 on the close of Friday, up almost $8. As I mentioned, 12.5 billion shares. You're approaching almost $100 billion in market cap added. Pretty remarkable. Apple shares up $2.50 right now as this market drifts higher. S&P is up by 40 right now. And we got a lot going on. You got the Bank of Japan as well. They're out there. They might be hiking for the first time since 2007. I believe that comes on Tuesday. And check out this chart, right? We've seen it before, but pretty remarkable. So you have the U.S. here in, we'll call it purple. You have Europe in blue in terms of their rates. I may sneeze. It's allergy season, folks. I'm taking my allergy meds, but boy, we got a lot of pollen this time of year, man. They got me this weekend, that's for sure. Excuse me. Bank of Japan, negative rates since 2016. And yeah, it might be time, and the market seems like it knows it's going to be time. And it's interesting that it's not even, there's yen weakness on the heels of that, which is remarkable. You have the Nikkei 225 climb the most in a month. The yen traded weaker against the dollar amid signs markets have priced in the potential already for the interest rate increase. You got one quote out here from a strategist. Japanese stocks are rising, driven by weakness of the yen and expectations that the currency will not strengthen even if the central bank hikes. I know we got a lot of gold bulls out there. Gold hanging in there right now. We jump over to the dollar yen, though. USD JPY and your dollar yen. 149.17. It's been quite a bounce off of the lows we had March 11th, the last week. You're up almost 3 full points as we're pushing those highs of 150 yet again right now. And we'll see where we go from there. You jump over to the gold contract. Gold pairing some of the gains. We hit the high at 2203, that high. Let me back it up. That high, March 8th. Okay, and we've pulled back a bit. Gold holding up relatively well at 2161. But nonetheless, you get Bank of Japan. We have Chairman Powell coming up on Wednesday, of course. You could say the main event. We still got some earnings going on. And yeah, as I mentioned, you got NVIDIA. Their 4-day conference going on. NVIDIA right now pushing above 900 this morning. You were at 878 as of the close of Friday. And it is interesting that they can push these types of prices right now. This is in person, okay? And I'm not sure what you get in terms of in-person versus conference and training, conference, exhibits in the keynote, 7:45 if you want to see Mr. Jensen Huang up there speaking. There's your 7:45. And you can do it all virtually for free, though. Online access virtually. I just Googled this, folks. You can find it going on in San Jose, California. And expectations sky high, man. How do you deliver more promises for the future when the market already thinks that you might be the most expensive company in the world in terms of what they're pushing? You're probably right back, yeah. $800 puts them at $2 trillion. They have, I believe, 2.5 billion shares. Yeah, 2.5 billion shares outstanding to the dot. So they're at $2.25 trillion market cap. Pretty remarkable. You jump over to Microsoft shares this morning. Yeah, they don't like that news, right? Microsoft down about $4. They're in bed with OpenAI. So the last thing they want is Apple and Google teaming up to take them on. But nonetheless, you got Microsoft pairing some of the gains. Quite a pullback on Friday from 428 to under 415. We're trading right now at 412.65 for Microsoft shares. All right, what else we got going on? Boy, we got a lot of articles pulled up this morning. And yeah, so keeping our eye on those Bank of Japan. Pretty remarkable that you've been negative for some time when you look at where the rest of the world is and where do they go? So they're going to hike. Eventually, I think you might get a little bit of strength there, but it's not happening just yet. Elsewhere, you got the Reserve Bank of Australia. They're set to extend its rate pause. Well, you got Indonesia and the Bank of England. A lot of central banks going on. Pretty remarkable. Yeah, Japan rate decision Tuesday. Look at Australia Tuesday. U.S. rate decision, of course, Wednesday. You got ECB President Christine Lagarde. She's going to be speaking Wednesday. Taiwan with a rate decision Thursday. Switzerland with a rate decision Thursday. Norway with a rate decision. UK rate decision. Mexico rate decision. Pretty remarkable. Yeah, all of those coming down the line this week. All right, we got to talk about cocoa, man. How about cocoa? And we were just talking about gold. How about cocoa, man? The headline here, cocoa, double. The price is double from the start of 2024, extending the historic rally. Major suppliers in West Africa. You got poor crops. The rally is beginning to bite just ahead of Easter holiday. Chocolate going up, man. Cocoa futures have doubled in less than 3 months. Yeah, the most active contract up another 6% to $8,500. We'll call it a metric ton, the highest on record. And yeah, West Africa, they got a bunch of problems going on, whether it's diseases, a series of weather extremes. Third straight supply deficit. Processing plants there are already suffering some shutdowns. No visibility on the next crop. So it's a tough one right now. Accelerating just ahead of Easter. I see all those chocolates out there. Nonetheless, keep your eye on cocoa, man. Quite a chart above 8,000. And you talk about an acceleration, man. Pretty remarkable. You back it up to the end of 2022 and you're talking about 2,500. So you go from 2,500, you start the year at 4,000, and then boom, cocoa blows out to 8,000. I know they've been talking about it in the den a little bit as well. Yeah, how about the NASDAQ this morning, man? NASDAQ pre-market tech glitch that lasted 3 hours is resolved. This has happened a few times, a couple times at least in the last 3 months, I think, right? No issues with matching engine are resolved. Excuse me. The issues with the matching engine are resolved. No trades printed for nearly 3 hours was what was going on. They resolved its matching engine issues, all systems operating normally. And yeah, the second in about 3 months. Yeah, in December, they had a problem that impacted thousands of stock orders, leading some to be canceled and incorrect clearing information to be submitted. They got to get their handle on those, man. And it seems like this is something that as we rely on these types of systems throughout everything, and nonetheless, we're going to see problems persist at some point. All right. Where do we go next? Yeah, we talked about that. Yeah, how about this one? Interesting. We got FedEx and Nike earnings at the end of the week. That kind of symbolizes the end of the earnings season. I'll steal that line from our man Kevin Hinks. He always threw that out there. We do. We get FedEx, we get Nike at the end of the week. But this one's interesting. The FedEx and Amazon had discussed partnership for competition, as competition for returning packages had intensified. As I mentioned, FedEx shares 253. You back this up on a weekly. Right back to where you were at the end of 2021 for FedEx. Quite a rebound from the lows of 141 about a year and a half ago. And we jump over to Amazon. They're getting a lift with tech stocks this morning. Amazon trading above 175 this morning. And we'll talk about that when we get back, as they're talking about, as companies trying to figure out how to handle returns. Stay tuned, folks. We're coming back to the opening bell. Don't go away. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. You got an S&P up by about 0.8% right now, up 43 points, trading at 52.25. NASDAQ 100, we surge higher, up by 1.25%, up 226 points, 18,285. You get the Dow right now, up 126 points, catching a bid. That's 0.33%. The Russell continues to underperform. Russell up only 3, up by 0.1%. Bitcoin down $750, just kind of chopping around between 68,000 and 69,000. Crude catching a bit, could complicate the scenario a bit if we get higher energy prices. Crude up 65 pennies at 81.23. I'm going to pause and look at the daily, man. You know, we talk about the VIX with higher highs and higher lows. I mean, check it out. Since the lows of December 13th of 67.71, that is a series of higher highs and higher lows in that crude market. We're talking about reaching a high on March 14th of 81.62. We hadn't seen 81.62, folks. Back it up to November 6th. Okay, that is going to complicate things when you get a little bit of higher prices. We got a Fed decision 2 days away on Wednesday, and they bring the dot plots, and we'll see where they go. We'll see where those dot plots go, especially this year. Okay, where do they envision we're going to be by the end of this year? Don't get too caught up in where they'll be 3 years from right now on that dot plot. The important part of that is where do they see us going 6 to 12 months from right now? Because that's the thing where they might have a little bit of foresight, a little bit of glimpse into the thinking in the Fed. But yeah, crude complicating things a little bit, to put it lightly. Gold backing off. We're basically flat right now on gold. You were up a few dollars. We're trading right now flat at 21.61, the price of gold. Silver up 10 pennies at 25.50, we'll call it. And we jump to notes and bonds. Lower price, higher yield as we get the 10-year right now at about 4.33%. So we're talking FedEx and Amazon. FedEx up about 0.5% today, up $1.18, trading at 254.30. And yeah, that article I was talking about, it is interesting as these companies, man, as we buy everything online, we have to return everything as well. And yeah, after a high-profile split, that was FedEx and Amazon, right? The FedEx wasn't delivering their package anymore. Amazon does use UPS still, but of course they deliver a lot of their own packages. Last year, this is not going on. This is not like Apple and Google, okay? This is not a current discussion, which the Apple and the Google discussion's happening right now for their next phone that potentially may use Gemini. Last year, okay, FedEx was thinking about discussing accepting returns for Amazon packages at their retail locations. That would bring that delivery giant a share of the business, according to people familiar with the matter. Amazon has partnerships with a number of companies, including UPS, to handle millions of returns it has annually. I think we're all familiar with potentially dropping off an Amazon return at that UPS store. I know I am. They happened last spring around the same time that Amazon introduced a fee for some customers who bring their returns to UPS stores. I haven't had to pay a fee yet. Maybe if anybody's got some feedback in the den. I can't recall having to pay a fee for a return. Maybe that's if you're not Prime. I'm not sure. In October, UPS signed almost a $500 million deal to buy Happy Returns. That's a company that has partnerships with several retailers and thousands of return drop-off sites. In its network, the deal enabled UPS to reduce its exposure to Amazon and handle returns from other online retailers, right? Probably a smart move. Last thing you want is to be beholden to Amazon. Then what do? They potentially make another deal with FedEx and you're in trouble. Happy Returns included FedEx office locations as a drop-off point for packages prior to being purchased by UPS and now no longer does. It does not accept drop-offs for Amazon returns. Quite a thriving business, the returns. I may sneeze again. These allergies get me a little bit. Whew. So at that time, FedEx saw Amazon as a growing competitive threat, okay, since they were developing its own delivering capabilities, right? This is talking about 2019. So pretty remarkable it's been that long. 5 years, right? Yeah. That's when they ended delivery contracts to move Amazon's boxes. Since then, FedEx has tried to fill its trucks and planes with parcels from other companies. Probably a long-term smart move, man. You got to know that Amazon's not going to be middled when it comes to delivering packages. And FedEx made the breakup. UPS is stuck with them. The breakup was a gamble for FedEx at the time. And since then, Amazon's daily shipping needs have only increased. Amazon accounts for nearly 40% of U.S. e-commerce sales. 40%, 4 out of 10 e-commerce sales are run by one company. When you think about how much we buy online, it is absolutely remarkable. So nonetheless, they're trying to potentially forge more partnerships as returns are a huge, huge part of that business as we return everything now online because we buy everything basically online. All right, what else do we got here? Yeah, we could talk a little housing. How about China? Yeah, China's growth bump may dent urgency for more stimulus. This will be an interesting one. So industrial output rose 7% in January to February from the same period a year earlier. That's the National Bureau of Statistics saying today, the fastest in 2 years and significantly exceeding estimates. Growth in fixed asset investments accelerated to 4.2%, the strongest since April. Retail sales increased 5.5%, roughly in line with projections. And yeah, quite a little bump. With the recovery in these data, policymakers will likely not see the need to do more than what they plan to do. It will take a much bigger slowdown for authorities to shift their policy focus to stimulating household income and spending to support consumption. So no more spending for right now, as China gets a little bit of a boost in their numbers for a little bit of a lift in terms of the economy. Yeah, this one's an interesting story as well. So bankruptcy. FTX bankruptcy trade. Well, guess what? What does FTX have? They do have some crypto assets, even though they don't have all the assets they're supposed to have. But crypto has had quite a resurgence, as we all know. And if you were betting on those bankruptcy assets, you've made quite a little windfall. How about a windfall to the tune of 200%? Betting on the remains of FTX is lucrative, but yeah, it gets a little bit complicated in here. So the trade targeting the remains of SBF's once vast crypto empire became a popular one in distressed investing circles last year. Okay, many people jumped in, and many people have delivered nicely. Lawyers running the bankruptcy now estimate the cleanup will deliver investors 100% of the money frozen in FTX when it failed. It's been cash crunches, folks. All he had to do was make it through the cash crunch, and his Ponzi scheme would not have been revealed, but he could not. But this is where the story gets a little bit messy. And yeah, they got a bunch of big players in here. The seller of one of the biggest FTX accounts it purchased, an obscure Panamanian firm, has opted so far to keep the claim for itself. Okay, and what's going on here? They agreed to a sell price for $58 million. Okay, today the claim's expected to pay out $165 million. You talk about a trade, man. Yeah, we could spend the whole show talking about that one in terms of what is detailed in here and who is going to be battling in court. That's what I was going to say. Yeah, the exchange did not have debt in the traditional sense, so the funds bought the right to the customer accounts, mostly small claims, backed by the holding of part-time traders and enthusiasts. And gathering up those accounts is a lot more complicated than buying distressed bonds. Yeah, not so easy as the usual distressed investor. Nonetheless, markets and positive prices, we catch a lift. S&P's up by 48. Stay tuned, folks. We'll be right back.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Keeping our eyes on the S&P. We're up 49 points right now. That's 0.9% in the positive. How about the NASDAQ 100, man? Up by 1.6% right now. You jump over to Google shares. There's a lift even on the open. Up $10, up 7%. And I think I mentioned they got about 12.5 billion shares. How about $125 billion in market cap added overnight for Google shares? Not bad, man. You jump over to Apple shares. They catch a lift on the open as well. Apple up by $3.81. What do they got in here? How many shares they got now? 15.5 billion shares. Yeah, so what are they adding? About 60 billion in market cap for Apple in the overnight session of 176.41. You jump over to NVIDIA as they begin their 4-day conference. You catch a bid on the open. NVIDIA up by $40. That's $100 billion in market cap added. You hear these numbers, man? My goodness, right? Yeah, NVIDIA's got 2.5 billion shares outstanding. Multiply it times 40, it's a nice even round $100 billion market cap added. Tech stocks surging higher to start the week. Pretty remarkable. Now, it is Fed week, and this one's an interesting one. Out from Bloomberg. Economics, the big take. Powell's silence frustrates markets as post-COVID economy shifts. And what they're talking about here is he really hasn't made any leaps, neither have the governors or the Fed presidents, in terms of making a call on how the U.S. economy has changed since the pandemic. I mean, their go-to line, right, is that they got to get back to 2%. But what if things have changed, right? What if the natural rate has changed a bit? And what is interesting here, long-run forecasts have hardly changed since 2019. Very difficult to imagine that somehow, when you combine work from home, you combine AI, you combine technology, you combine the unemployment rate we're currently sitting at, et cetera, the job market that's currently going on right now. GDP growth, the only thing that has changed in their long-term forecast, and it's gone from 1.9% to 1.8%. Everything else is exactly where they were coming into the pandemic. Very difficult to imagine that the economy is going right back to where you were prior to the pandemic. Median forecasts of governors and presidents little affected by the shocks of the recent years. Inflation, they want it back to 2%. Many people make the argument, right? Now, even though they're saying that, and boy, he has been adamant, maybe that's not quite where the economy is going to go. We will see. Unemployment, they want it back to 4.1. We just went from 3.7 to 3.9. They want the benchmark rate at 2.5%. Well, that's obviously hinging on where inflation rests, et cetera. We'll see where we go. Powell keeps talking about normalization and rebalancing. This is Jim Bianco, president of Bianco Research. But you can't go back to 2019. Whenever we have a big shock in this economy, like 2008 or 2020, the economy has changed. Very reasonable argument to make. Consumers seem to have a higher propensity to spend, perhaps due to greater confidence in job security. You think about where the market was at the end of the 2008 crisis, 2009, right? How people's spending habits, whether it was, the equity they lost in their houses, maybe just the housing themselves they lost. Personal savings rate was less than 4% on average the past 2 years, compared with more than 6% over the decade through 2019. That is a massive difference that is obviously going to contribute to a differing factor in the economy. You have companies seeming to keep precautionary inventory on hand, a little bit scarred from what happened during the pandemic. Wholesale stockpiles returning at a higher rate to sales than pre-pandemic. Then you have the job market, right? You get just anecdotal evidence, but everywhere. Even salary hikes and profit-sharing plans to distribute 25% of profits to employees hasn't been able to lure enough workers. This is Optimax. Post-pandemic, we have more jobs than workers. Yeah. It'd be interesting to see if any of that changes on the Fed this year. Wage gains continue to run north of 4% annually against an average of 2.4% over the decade through 2019. We know there's lag in wages. We'll see where they go from there, though. For many investors, the economy looks more inflationary for the long haul. That's kind of a nice summation. Requiring higher interest rates, futures trading suggests about a 3.5% benchmark Fed rate in a few years' time, a full percentage point more than Fed policymakers' latest long-run forecast, which is set to be updated March 20th, 2 days from right now, Wednesday. And boy, if you ever get the Fed adjusting their benchmark a full percentage point higher, watch out in these markets, man. Can the market be successful with the Fed at 3.5 versus 2.5? Yes, it definitely can, especially when you have the type of moves that we have right now, the productivity gains that are coming from AI, et cetera. But boy, it seems like there might be some changes that have occurred since 2019. It seems like the Fed might be reluctant to admit that, and we'll see where they go from there. All right, folks. We got Fed Day on Wednesday, but before that, we got our man Basil Chapman. He's coming up tomorrow, folks, for a special webinar tomorrow night, 4 till 5:30. You can get into this webinar, folks. All you got to do is sign up for the opening call. Check out Basil's outstanding daily trading service, the opening call. You get in there, you get to attend Basil's 90-minute webinar tomorrow night, right after my dad's show, 4 till 5:30. The technical tools needed for the coming few months. Pretty simple, right? Going over what's happening right now. He's talking about the 914 moving average crossover, okay? He's talking about the weekly Chapman wave buy mode. Let's see. Deciphering the rare flood of round numbers unfolding in this market, sector rotation, stock selection, live question and answer. Check that out, folks. Sign up for the opening call. You can hit subscribe. You can get in there for a month for $149. You can get in there for 6 months for $695. That's a savings of $199 or 22%. Or you can get in for $1195 for the year. You save $593 over the year, folks, more than a 33% savings. All of those come with a 30-day money-back guarantee. So I encourage you to think about signing up for the 6 months, signing up for the year. If you're considering keeping it, lock in those savings. You still get a 30-day money-back guarantee. You get Basil's newsletter for a full month. You get the webinar coming up tomorrow. And yeah, talk about a top appropriate time for this webinar. We got markets soaring. We got Fed Day on Wednesday, and Basil will be in there with his subscribers for 90 minutes, 4 till 5:30. That will be archived, so if you can't attend live, folks, check it out. It'll be right on your members page. You can watch it whenever you like, as many times as you'd like, as long as you're an opening call subscriber. Basil's got an outstanding newsletter regardless, folks. You could check it out, and it's just a bonus that you get a 90-minute webinar tomorrow at 4 o'clock, right ahead of Fed Day. Pretty awesome. All right, what else do we got here? Yeah, I mean, this ties into kind of what we're talking about with the Fed in terms of prices, just the move of everything, not going back to exactly where we were in 2019. I mean, Florida's its own animal in terms of what we've experienced. We have the wind at our backs, folks, but boy, it's been quite a surge in prices. Florida is not so cheap compared with New York these days. The surge in the Sunbelt real estate prices erodes the financial benefits for those attempting to relocate away from Manhattan. Now, everything is context, okay? But look at the savings and how the changes have decreased, okay? In terms of the savings, this is how much you save if you move to Texas or Florida, okay? If you're going Miami, you were saving $23,000 in 2019. You're only saving $88,000. You're still saving $88,000, man. Dallas, $135,000 to $108,000. Still saving 108,000, right? New Yorkers earning 250K won't save as much. Pretty dramatic savings nonetheless, man. We'll finish this up. We'll come back, folks. We'll talk about some of the cost of living going on in those cities as well. Stay tuned. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets pretty much holding on to the gains we had pre-market. S&P's right now up by 44 points, trading at 52.27. NASDAQ 100 surging 1.5%, 18,321. You check in on Google shares, up almost $10. You get back some of that gain, but up by 6.6%. Quite a jump. Apple shares, they keep jumping higher, man. Apple up $4.50, up by 2.6% right now. And jumping back to that story, so it is interesting in terms of these numbers. Now, the headline is it's not as cheap as it was. But boy, you're talking about some savings that are still there, man. They were talking about $250,000, okay? And a lot of people, if you're living in New York, are making $250,000, okay? You got to make some coin if you're living in New York, you're living in Manhattan. But how about just $100,000? In 2023, if you're moving from New York City to Miami, it's kind of even maybe it's definitely pricier than where I'm living in Polk County, pricier than Tampa. Miami's on the rise, as we know. If you're making $100,000, you're saving $37,000 a year. That's bonkers, right? In 2019, that number was around $51,000. You're still saving $37,000, folks, okay? For those earning $250,000, you're saving 88 grand versus the 123 we highlighted at the beginning of that conversation. The wind is still at your backs, folks. There's a tremendous ability to work remotely, okay? And you have many companies realizing this, relocating, opening offices in the likes of Miami. Kathy Wood in St. Pete, of course. There's an article in Bloomberg, I think it was last week, talking about that she set up in St. Pete. She's making her mark. Smaller city than Miami, of course, but quite the city. And yeah, so keep your eye. These are still substantial numbers in terms of the savings that you can have, the wind at your back. Yeah, and that's not going to go anywhere anytime soon when you talk about that type of savings and how the world has changed in terms of where you can work to some degree, to put it lightly, right? Yeah. All right, what do we have? I feel like I had one more I wanted to jump to here. Yeah, that wasn't it. What are we looking at? Oh, this one, to finish it up. So we're talking about Florida, right? This article was just out. We're going to wrap it up. But Polk County, where I live right now, Lakeland, you had more people moving to Polk County than any other county in the U.S. from the country. 29,000 people moved to the country. This county, it's happening, folks. Florida. Come on down, folks. Stay tuned, folks. Basil's coming up next. While you're waiting for him, go check out the opening call on the front page of TFNN. Have a great one, folks.